You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. And today I want to start out and remind you that you can still get a copy of my course, Your Roadmap to Real Wealth. It is available. If you want to check it out, check out the page, wealthformularoadmap.com. This has been a pretty cool project. It was something that took several months, a lot of money, but I'm really proud of it. There's a lot of big names and smart people who are part of this, like Tom Wheelwright, Dean Graziosi, Kevin Day, all these guys who really spent hours and hours just going through enormous amounts of detail on things that they're very, very good at. Obviously, I do some teaching in there as well. The other bonus of that is the Wealth Formula Network, which is you do get a period of time free on that as well. And that is the Wealth Formula Tribe. And it's pretty cool. We had our first call yesterday. We have forums and then we have calls every couple weeks. And I have to tell you, I learned a little bit on there myself. So there's a lot to be said for this kind of collective intelligence. So if you are ready to get on this journey, and check your roadmap to real wealth out, and check that out at wealthformularoadmap.com. Again, that's wealthformularoadmap.com. Also, remember, you can just get my free book still, 7 Secrets of Eternal Wealth. Just go to wealthformula.com or simply text me at 44222 and type Wealth Formula, which is one word, 44222, Wealth Formula. So, as for today, I want to talk to you about the idea of making money, right? Listen, I'm not talking about a salary. I'm talking about maybe getting outside of the salary a little bit and figuring out how are you going to make a little bit more money that's going to fuel all these exciting investments that we talk about here on Wealth Formula Podcast. And I'll say this, and a lot of you will look at me cross-eyed a little bit, but I'm going to say this, and it's actually not that hard to make money, okay? It really isn't. I say that, and I actually mean it. Because you see, everywhere I turn, I see opportunity. And if you're not seeing opportunity everywhere, why am I seeing things that you aren't? Well, I think for those people who are not seeing opportunity, I'm just looking in different places than you are. You see, there's often a herd mentality amongst investors and frankly amongst entrepreneurs as well. And we see what others are doing. We see them have success, and we try to do the same. And to a certain extent, it works, right? Listen, I'm the last one who wants to, change up something that's working. In fact, I built a couple of my business on a similar concept. All I did is change the variable, but you got to at least change the variable to make it a little bit easier. The problem is that when a lot of people are doing the same thing and it gets really popular, it brings about a lot of competition, and there is nothing that can kill profit margin like competition. I learned this from the business world, and my first business was a cosmetic surgery practice in Chicago. And that's what I started initially as an owner-operator. And that still exists in Chicago. Now a couple guys out there are working hard in that business to make it successful. But listen, in Chicago, there is a cosmetic surgeon on every block. Why? Well, because it's glamorous. And every surgeon who's trained in that plastic surgery area wants to be famous. They want to be on TV. They want to be the next Dr. 90210. Luckily for me, I didn't really care to be famous. I just wanted to make money. And, I wasn't really interested in all the glam stuff. So, and for those of you who are actually watching this, watching this on YouTube rather than listening to me, you can see that I am certainly kind of a little scruffy and stuff. I'm just not like a glamorous 90210 type. Now, so anyway, I focused on building my brand because of that. I didn't care to be a famous plastic cosmetic surgeon. And because I built that brand rather than my fame, it made it easier so I could scale past other famous doctors pretty quickly in terms of actual volume and in terms of actually making money. Now, that said, if I had to do it again, I'll tell you, I would not pick cosmetic surgery as a business. And the reason for that is that it is too glamorous, and too many people want to do glamorous things. It reminds me a little bit about a story that a friend of mine was telling me a couple months ago, and I thought it was pretty interesting. He was telling me about his father-in-law, and his father-in-law created really an empire in the janitorial services industry. In other words, he had like a bunch of janitors working for him, and he started out as a janitor himself, and making a few bucks an hour. My friend asked him how did he do it, and his father-in-law said it was easy. He said basically, quote, "Well, no one else really was interested in the business of cleaning up shit." It's kind of funny when he says that, but of course, actually, when you think about it, it makes a lot of sense. There's a lot of wisdom in there, right? If people are not interested in something, it doesn't seem glamorous, they're not running to it, yet there's a need for it, there's a tremendous opportunity to make money. The business I started since that initial cosmetic surgery business that I have been actually much easier to profit in because they are, frankly, not terribly glamorous. And over time, I've realized that the less glamorous a business, the easier it is to make a profit. Now, the same could be said about investing, because I know, you may not be an entrepreneurial person. You may not want to do that. You're making plenty of money in your day job. I get it. But the same could be said about investing. It's very hard to invest right now in certain things that everybody else seems to think is very glamorous. We had this wonderful opportunity in apartments recently, but it took over a year and a half for me to find out something that I could get behind, in apartment buildings, because right now everyone wants to be an apartment investor. You see so many apartment gurus, and, they're telling you that you can retire so easily by investing in apartments, and you believe it, and you look at them and you're like, wow, I want to be that too. It's just, the problem is that it gets overheated, and when everybody else wants to do the same thing, it becomes harder, profits become less, etc. So it may not be for everybody. It may not be the right time necessarily to get into apartments either, because, look, no one wanted to really be in apartments in 2009, 2010 when the sky fell from the sky. And then those who bought in 2009, 2010, or even up to probably 2014, they could have been the stupidest people on earth. And if they didn't make money buying their apartment buildings because they just bought at the right time, then they would never make money. Right? Those years made a lot of people look very, very smart, when in fact it was just a reality of a massively appreciating market. Now, on the other hand, take something that's completely esoteric. Let's take, for example, raw land, right? Who's thinking about raw land? Yet, my guest this week on Wealth Formula Podcast appears to be crushing it. Even though this is a really unusual part of the investing world, and frankly, I don't know anybody who is doing this kind of stuff, but I'm not surprised. If you figure out how to catch fish where no one else goes fishing, you're bound to come out a winner, right? You're gonna catch a lot more fish that way. And that's pretty much what my guest Mark Podolsky did with raw land. And when we come back, we're going to hear exactly how on this week's Wealth Formula Podcast. Welcome back to the show, everyone. Today, my guest is Mark Podolsky, who bought his first few parcels of raw land in 2001. Today, he's the owner of Frontier Properties, which is a very reputable and successful land investing company, and has been buying and selling land full-time since 2001. He's completed over 5,000 land deals with an average ROI of over 300% on cash flips and over 1,000% on deals that he sells with financing terms. He is also the host of the Land Geek podcast, which is a very cool podcast. Mark, thanks for joining us on Wealth Formula Podcast today.
Dr. Buck Joffrey, thanks for having me.
You got it. Hey, man, so let me start out by asking you, tell us a little bit about yourself, because, what were you doing before 2001? And then ultimately, how did you end up in this, I think, sort of an unusual area of purely land investing?
Yeah. So I was a miserable investment banker specializing in mergers and acquisitions with private equity groups, doing middle market stuff, 5 to 500 million in enterprise value. So nothing too crazy. But I had a 45-minute commute to work and back. They were long hours. It was high pressure. It was high stress.
Were you in New York?
I was micromanaged. No, I was in Phoenix with a boutique firm here.
Got it. Okay.
And I hated it. And it got to the point where I wouldn't get the Sunday blues anticipating Monday coming around. I'd get the Friday blues anticipating the weekend going by really fast and having to be back at work on Monday. So my firm hires this guy, and he's telling me that on the side, he's buying up raw land, pennies on the dollar at a tax deed auction, and he's flipping them online, and he's making a 300% return on his investment. Well, I'm looking at companies all day long, and a great company has 15% EBITDA margin or free cash flow. Great company.
Yeah.
Average company's 10%, and I'm looking at companies all day long less than 10%. So I'm originally from St. Louis, Missouri, the show me state. I don't believe him. So I've got $3,000 saved up for car repairs. I go to New Mexico with him. I do exactly what he says to do. I buy up 10 half-acre parcels at an average price of $300. I put them online, and they all sell at an average price of over $1,200 in the next 30 days. So it worked, 300%.
Yeah.
So I took all that money, and I went to another tax deed auction where I live in Arizona. And again, this is 2000. There's no one in the room. I'm buying up lots, acreage for nothing. And over the next 6 months, I sold all that property, and I made over $92,000. So I said to my wife, I'm like, honey, I'm going to quit my job, and I'm going to invest in land full time. She's pregnant at the time. She said, absolutely not. So I said, fine. So I invested in land part-time for 18 months, and it took me about 18 months for the land investing income to exceed the investment banking income, and then I quit, and I've been doing it full-time ever since. I've done over 5,200 land deals, and I love it. It's really the best model. I've got a podcast I had Tom Wheelwright on, and I went through my model. I'm like, Tom, do I have the best passive income model? He's like, yeah, you do.
Yeah.
So I can kind of walk you through it.
Yeah. No, and that's great. I mean, so I'm totally intrigued, and I've been wanting to talk to you about this and figure out, what you're doing. But so you talk about, you just mentioned a little bit about sort of the capital gain standpoint of this, but in the form of essentially of flips, right? But you also talk about this as a cash flow model. I mean, that's really kind of the unique aspect of this. Can you give us sort of a 1,000-foot view of that? And since you mentioned, Tom, why don't you include the tax consequences of that too?
Yeah. So let me kind of walk you through it step by step. So you're in Santa Barbara, California, right?
Right.
Okay. So I go to a county in Texas, and I'm looking at a 10-acre parcel on either the assessor's list or the tax delinquent list. Let's go to the tax delinquent list. I say, oh, look, Dr. Buck Joffrey owes $200 on this 10-acre parcel in Texas. Well, you're advertising two things to me. Number one, you have no emotional attachment to that raw land. You live in Santa Barbara. The property is in Texas. Number two, you're distressed in some way. Because when we don't value something, we don't pay for it. And you owe $200 in back taxes. So I don't know what your distress is. Maybe you just, lost your job, or maybe you're going through a divorce, or maybe you're just not interested in the property anymore, whatever it is. But eventually, if you don't pay those property taxes, you're going to either lose it to a tax deed sale or a tax lien investor, and they'll eventually foreclose on you. So you're going to lose that property at some point if you don't pay your taxes. So what I'll do is I'll look at the last 12 to 18 months of comparable sales on those 10-acre lots in Texas. And then all I'm going to do is divide by 4. And that's going to get me a 300% margin of safety, as Warren Buffett would say, right? Mm-hmm. So I'm not going to be like the housing guys and send you a letter saying, hey, I'm interested in buying your land, I'm actually going to send you an actual offer. And because you owe $200 back taxes, you live in California, you accept the offer. Now, the reality of this is that 3 to 5% of people accept my quote unquote top dollar offer of 25 cents on the dollar. So you accept it. And then I go through my due diligence.
So just back up for a second. Might have missed this. How do you determine what the value of the property is at that point, of the land is, before you send that?
So I look at the last 12 months of comparable sales.
Okay, and so it's just like comps in real, when you have an apartment building and that sort of thing, right? I mean,
exactly.
Yeah.
Now the problem with land, and the great thing with land, is it's a very inefficient market. So the comps could be all over the place. So I'm going to take the lowest comp and divide by 4.
Okay.
So you accept the offer. I go through due diligence. I want to make sure you own the property. Back taxes are only $200. There's no, breaks in the chain of title. There's no liens or encumbrances. I have a whole property checklist. Everything checks out, and then I buy your property for, let's say in this example that the comps are $100,000, and I buy it for $25,000.
Okay.
Right?
Yeah.
So now I bought the property for $25,000, and now I've got a best built-in buyer. Do you know who it is?
No.
The neighbors.
The neighbors. There you go.
So I sent out neighbor letters, and I said, look, before I go to the open market, here's your opportunity. Expand your holdings, protect your privacy, protect your views, right? So oftentimes the neighbors will buy that parcel. Now, if the neighbors do pass, I'll go to my buyers list. If the buyers list passes, I'll go to a little website you probably never heard of called Craigslist. It's the 10th most trafficked website in the U.S. And then I'll go to Facebook buy-sell groups. Either way, I'm selling this property in 30 days or less. And the way that I'm going to sell it is where we make the property cash flow. So I'm going to do owner financing on a land contract. So essentially, I'm going to get $25,000 as my down payment. So I'm going to get my money out on the down payment, or within, let's say, 6 months of the down. And then I'm just going to make it, a nice, easy, let's say, car payment of $1,000 a month for the next 10 years, right?
So that's pretty cool. It's almost like getting that, in the real estate world, we always do the cash out refi, right? I mean, this is effectively doing the same thing with the seller's money, and you've taken your risk off the table.
Exactly.
That's cool.
So I'm going to owner finance it, $1,000 a month, 9% interest, 10 years. And now I've created a passive income of $1,000 a month over the next 10 years. And I don't have to deal with a renter, no rehabs, no renovations, no rodents. And because I'm using a land contract, if you stop paying me, there's no cost of foreclosure. I keep the down payment, I keep the monthly payments, I resell it to a new person, extending out my ROI and my note. Also, because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act. Now, if I'm Tom Wheelwright and I'm looking at this model, the biggest knock on this is, well, look, that's all good, but there's no depreciation, right? Because the raw land lasts forever. And so we can take advantage of self-directed IRAs or a qualified retirement plan, invest our SEP money or our Roth money, and grow and really supercharge those retirement funds, growing tax deferred or tax free at 300 to 1,000% margins. And that's really where the benefit is. Now, if you don't want to do that, if you own it a year and a day, you're actually at a capital gains rate as well.
Is that for the cash flow as well? Is that how that works? Okay. So initially the first year you're paying ordinary income.
Ordinary income, correct.
Right. Yeah, that's interesting. So, wow, that's a very interesting concept. A couple of questions come to mind here for me. What are people doing with this land when they buy it typically? I mean, is it, if they're buying it, are they usually using it to build houses on? Are they using it for recreational purposes, or is it all over the board?
It's all over the board. I'd say the majority of my buyers, what I call legacy investors, they just want to own a real asset that they don't have to maintain, they don't have to protect. It looks really good to their banker. They're building their net worth. and maybe they'll go out there one day and do something on it.
Yeah.
And in a way, I almost call it man jewelry. They just like the way it feels, right?
Yeah.
Like,
yeah.
I've got
Right.
I've got a CEO in San Diego. Every month he has a note at $5,000 a month for me, and for years and years, and he keeps buying up all this raw land. I call him up, I'm like, Don, what are you doing with all this land? He's like, I don't know. I just think it's cool. He's never even looked at the property.
Yeah.
He just thinks it's cool.
Yeah.
And so we see that a lot where there's literally a pig for every barn. I bought 40 acres in New Mexico, and I made a mistake during due diligence, and I didn't see the property corners, and it was literally on the side of a mountain. There's no ingress or egress. Like only 15 of the acres are actually, you can actually access, right?
Right.
So I'm like, oh my gosh, I paid $2,500 for it. So I put it up on eBay, and I thought, well, if I just get my money out, I'll be okay. The first day it gets bid up to $2,500. By the 10th day, it goes up to $32,500, and I'm freaking out. So I call up the winning bidder, like, you realize, 25 of these acres are inaccessible. He's like, it's perfect. And he happened to be a film director in LA, and he wanted to film out there, and he didn't want to deal with having to get permits. So it just, these crazy things happen in raw land.
Yeah. Okay. So Mark, tell me this. So I'm, I like to kind of visualize, how this works. And so if I'm interested in this concept, I go, and first of all, where do I find the land in the first place? I mean, where do you go to find this stuff? It's obviously not like on if we're buying from you, you look on Craigslist, right? But
right. Yeah. I mean, nobody wakes up and thinks to themselves, boy, I'd really like to own some raw land in Iowa.
Yeah. Right.
Unless you live in Iowa.
Right.
So we go to places where there's lots of inexpensive raw land and in the path of growth and the Sunshine States. So we really only specialize in the Southwest, California, a little bit in the Northwest, and Florida. And we really ignore the rest of the country.
Yeah. And is there platforms that are focused just on land that you typically use, or?
Yeah, there's landsofamerica.com, there's landandfarm.com, there's landmodo.com, there's landflip.com, there's landhub.com.
Right. But
I mean, it's
in your case, you're actually, you need to go find out who owes money. So that's where you start when you figure out a place. Right.
So we look at the counties where, we've done deals in the past, and really, I've got a client, he's a full-time firefighter. He's at over $15,000 a month now in passive income. He makes more money on his land investing business working at it 2 hours a week than he does as a full-time firefighter. And he works in one county, and he's been doing it for 3 years.
Right.
So you don't have to work that many counties to do this.
Yeah.
And, the great thing about the model is it's 90% automated with software. You can do it from anywhere in the world. It just becomes a machine. And it's really, one of those interesting niches, because if you go to a RIA meeting and there's 100 people in the room, 99 of them are going to be landlords, house flippers, or wholesalers. You and I, Buck, are going to be the only land guys.
Yeah.
So you're not going to go on HGTV or the DIY network and see me on Flip This Land, because it's just boring. It's just me in front of a computer.
Right.
So, billions of acres of land and nobody really doing it.
Yeah. So that one is just one of the things that occurred to me, is that it sounds like a volume business, right? I mean, if you did 5,000 transactions since 2001, I mean, several hundred transactions per year. And I mean, is this like a full-time job, or is it truly passive investing? Can you kind of give us a sense for, what do you have to walk every single one of these properties? Or, I would think as somebody who invests in multifamily real estate, I wouldn't invest really without going and seeing the property and walking it. But is land different?
Land is really different, because what we do is we crowdsource it. So for $50, we'll do a local Craigslist gig and have somebody locally go out there, fill out our property report, take pictures, shoot video. And because it's raw land, I don't have to look at pipes, right? I don't have to look at the structure. There's nothing physical. I just want to know, can we find the property? Right?
Yeah. Right. So you don't even need to do all the soil testing and all that, right? Because
no, nothing like that. Because so Again, these are inexpensive parcels. I mean, they're typically under $30,000. And so we're not talking real money here. And our cost of due diligence are so low. We use the Philippines. We got somebody who's connected to a American title company, and we pay $11 for our due diligence. I mean, it's crazy. So it is a volume business, but the game we play is, can we create enough owner finance notes where our passive income exceeds our fixed expenses, and we're working because we want to, not because we have to. So it is this one-time sale, and then we get recurring income every single month. But yeah, that one-time sale is not passive. So in a sense, I work about 2 hours a week in Frontier Properties. Mm-hmm. So, in that sense, it's very passive.
So you're not walking this stuff, so that makes it automated. Obviously, there's other things I think about with this business model, and I'm just trying to figure out, in part, like, how does somebody who doesn't do it, who maybe has a full-time job, as you know, I have a number of listeners who are physicians, or maybe they're working lots of hours and making lots of money, but this sounds really appealing, and trying to figure out, when you have this, do you need a lot of systems? And maybe your training comes into play when you talk about that, but I would think that how do you even now you've got all of this debt in play, and how are you making sure that everybody's paying you? I mean, is that part outsourced? I mean, it sounds kind of complicated, so I'm trying to get a sense for at a 1,000-foot view, like, how is this machine working?
Right. So from the front end, we automate our mailings. We automate our marketing using software. And then on the back end, we automate getting paid via ACH. If the ACH fails, we hit a credit card on file. We use a software program called geekpay.io, which manages it and manages that relationship between me, the lender, and them, the borrower. So the borrower can make a prepayment at any time. They get notifications. They can go online and see their current balance at any time. And so it really is all automated, because, any way that I can save time, I'm investing in it. So if you are an accredited investor, we also have a fund, and, for those people as well that don't have that kind of time to, sort of do exactly what I'm doing.
Yeah, we do have a lot of those. So that's good to know. What kinds of, obviously past performance does not predict future results, but what kind of returns are people getting on
Yeah, I mean, because of the way the fund's set up, I really can't publicly talk about it.
Yeah.
But I can tell you that,
in theory, how would a fund perform like that potentially? So it's a Reg D 506B, so we're not talking about a specific fund, but we're talking about a fund in this area.
In theory, we would be very disappointed of anything south of 30%.
Is that right? And distributed
for our investors,
like on a quarterly basis or something like that, huh?
Yeah, I mean, absolutely. And we invest alongside them as well.
Yeah. Very cool. So, okay, so now there's some people like me who are like, man, I should really look into this. And you've got training for that, right? So tell me about the training.
So, the best place to start is thelandgeek.com, and you can download for free our passive income blueprint, get the ebook, How to Avoid the 3 Fatal Land Buying Mistakes, and then you get our podcast delivered each week to their email inbox. And then, Buck, if they send an email to support@thelandgeek.com with the subject line Wealth Formula, we'll send them for free our passive income launch kit, which is normally like a $97 course for free. And I think that's enough information where you can really dip your toe in the water and see if this is something that resonates with you and you really understand every part of the business to take sort of the next step and get more serious about it and think, okay, maybe I would want to invest in additional training or not.
Yeah, right. So I'm curious, one of the things that comes to mind to me as I'm starting to look at various other, I have a little bit of ADD, Mark, so I can't, I do surgery and then I'll stop and I'll do, start a business and then I'll start to invest in things. So, but I'm looking at, what to focus on in the next few years. And one of the things that comes to my mind is, I see that a very high likelihood of cycles changing. We're sort of at the top of the cycles in a lot of the asset classes right now. How did land perform in 2008? Obviously, you were part of it. And what happened, and what do you expect in a downturn with this kind of model?
Right. So what's interesting about our models, we're sort of on the long tail of real estate. So if the head is, say, residential and commercial, right, they got crushed in 2008. I really didn't get hit until 2010. So people are still trying to pay their notes and try to, perform. But then 2010, it all kind of came to a head, and it became between, hey, paying groceries or paying their land note. So we had 40% of our notes go into default.
Wow. Okay.
And so that was a really, really sort of a cataclysmic event. The other guys in my business, like, give an example, he started earlier than me. He was at $250,000 a month in passive. He went down to $125,000 a month in passive. It took about 3 years to recover from that. Today, we're looking at a default rate in a good economy at 4%. And I think when it turns, we're going to look at a default rate at about 10%.
Yeah.
And in a cataclysmic economy, like what we experience, which hopefully is a once in a lifetime event, we're looking at a 40% loss.
And just to be clear, with the strategy that you talked about, by this point, though, you've got your, potentially you've got your down payment, you've got your risk off the table. So really what the question is, okay, is it going to kill you if you're just sitting, with land? I mean, is there cost associated with the land?
So like for me personally, my income went down 40%, but the business itself was still profitable. And the returns are there because I still own the underlying asset, and I just had to get the velocity going in and resell it. So I could, I had my money out. I had a lot of flexibility to lower down payments, lower monthly payments, and make it irresistible for a buyer. So it just took sort of time and sort of this, not knowing, like just being shell shocked, for the first time going through that cycle, how to pivot.
Yeah, absolutely. And when you're sitting on land, raw land, what kind of expenses do you have in holding when you're just holding land?
Just property
just the taxes. I mean, you don't have to maintain it at all or anything like that.
No, nothing like that at all.
And presumably, I mean, these are pretty inexpensive plots of land. The taxes are not going to be crushing you or something like that, right?
Not at all. Yeah, no, not at all. And again, we sell these in 30 days or less. I mean, it's just a machine. Yeah.
Well, you're selling it and then you're cash flowing too, right? I mean, there's two double prong approach here. So anyway, this is really fascinating stuff. Tell me a little bit more about the podcast. I have been a guest on it, which I just thought was it's a lot more fun than my podcast. We're just like all business here, But
yeah, I mean, the Art of Passive Income podcast. We do 2 shows a week. One is with an expert like you, and we kind of just, dive in deep into kind of extracting out your success secrets. And then the other one is a roundtable podcast with myself and other land investors, just talking about what's going on in the raw land market and things that we're seeing in real time.
Fantastic. Well, listen, Mark, thank you so much for being on Wealth Formula Podcast today.
Oh, Buck, thank you so much. I'm really happy that I was able to join. Thank you.
We'll be right back. So welcome back to the show, everyone. You got to love that interview, right? Listen, I listened to that. I listened to what Mark has to say, and I have to tell you, because I do like shiny objects, I'm very tempted to give this whole thing a shot myself. And I may very well do that because part of what I'm thinking about doing on Wealth Formula Network, which is, again, our forum, is actually having a series of course and coaching reviews. So I'll be the guinea pig. I'll go try out these things and see if I can make a profit. If I can, I'll report back to you. It'll sort of be like CNET, right? So anyway, check that out if you're part of Wealth Formula Network. If not, check out the course at wealthformularoadmap.com. Anyway, again, lots of opportunities out there, and And, Mark is showing just one more. And so it's just a matter of figuring out what sticks. And if you try this enough times, you will make money. And I'm living proof of that. So finally, a quick reminder to make sure to give me a review on iTunes and subscribe to the show. I know you guys have been doing it because the show has drifted in the top 30 in the business category, in the top 10 in the investing subcategory on iTunes. So thanks for doing that. That is a big feat, and I think I have you to thank for it. But keep it up. Let's keep this baby going. And that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.